Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, December 13th through Friday, December 17th, 2010. Well, what you're looking at before you, folks, is the chart of all 5 days last week, Monday through Friday. You can see early in the week it was a little rocky. We had a couple early moves, especially on Tuesday, with a big gap up to our master resistance at 124 on the SPY, which mirrors the S&P 500. But as soon as we hit that resistance level, the market's backed off very quickly, coming down, pushing up, and then falling into the close, basically closing flat on the day. This week's bias, or I should say last week's bias, was for a neutral to upside move, and that's exactly what we got all week. As you can see, even when you had that big gap up on Tuesday, it reversed to close flat. Wednesday started slightly higher, reversed down, and then floated higher the rest of the day, closing neutral to flat. Thursday, another gap up into the 124 master level. The 124 level was a key level. We talked about it. Notice how 2 hits this week were perfect shorting opportunities. Know these levels, use them to your advantage. I'll give you the next level later in this video that you're looking for early in the week on the upside. All right, so again, market on Thursday pulled back early, and then again, light volume comes in and floats it neutral to higher. Friday started a little bit higher, saw a small sell-off, and then light volume took it higher as well. And again, finally on Friday, we broke above the 124 level right there. You pulled back underneath it, but then floated the rest of the day neutral to higher, and again, closed at 124.48 on the SPY. Dow closed on Friday up 40 points, NASDAQ up 21, and the S&P 500 up 7.5. All right, now, again, the neutral to upside bias continues to be dead on. We've had this bias for the last 2 weeks, and we have gone up for the last 2 weeks to a neutral tune-ish with, again, an upside tinge to it. Now, knowing that and knowing the charts, what we're seeing here is you are looking for a resistance area just above 125, a very significant resistance area above 125 on the SPY. So we are nearing a level where you could see a pullback, and that's what I'm going to say this week. It does look to me like if there's going to be a pullback, it's going to be this week. It's not really, most likely, if you don't pull back this week, you will not have a pullback until the new year. And even if you pull back this week, look for us to head higher possibly next week and the following week, which is the New Year's week between Christmas and New Year's. So again, this week is really in my analysis and my chief market strategist analysis at my firm here at In the Money Stocks. It's looking like if we're going to have any sort of small pullback, and we're not looking for a big pullback. I want to make that clear, folks. It's not like you're looking for a 500-point drop or a 300-point drop this week. If anything, it's a couple hundred points max, maybe not even. And I'm talking spread out over days here. So you're looking at a down 50, 75 day here and there, maybe another down 75 day, down 150 to 200. And then again, once that's in, the rest should be neutral to positive. Last week, POMO continued to push the markets up. Everyone should know what POMO is. When you see a market, especially in the late day, with light volume kicks in that just floats sideways to up, look at this right here. Perfect. Right here. Perfect, right here, and right here. Notice how it's basically every day except this one first gap update of the 124 where you shocked the markets a little bit. They gapped up into a major resistance at 124 and pulled back off of that. But the rest of the days, the light volume came in and propped the markets up. And even on that Tuesday, you still had that float. You just had a seller come in late in the day and push it to the downside a little bit there. So again, markets look for next week to have a little bit more of a chance of a pullback. We've been talking about neutral to upside. And again, this is the first time I've kind of gone in more of a neutral, maybe a small pullback zone going into next week, and again, that's what we're thinking right now. Now, does it mean that there's a lot of good shorts out there? No, not really. If you're shorting heavily, you're betting against the Federal Reserve. You should never bet against the Federal Reserve, at least not yet. There will be a time and a place when things collapse again. It is not for a while yet, so be aware of that, folks. And again, I believe in taking small short positions in a couple key stock charts that look extended. I'm not going to reveal those stocks because that's in the Research Center. If you're a Research Center member, you got a little bit of an in-look or outlook on certain stocks, bearish pro-trader watch list stocks, and also some keys in the hot charts and alerts. Those are the ones that we're talking about. And again, overall, we will not reveal those to the public here in this free video. All right, so again, you can join the Research Center at In the Money Stocks if you want to get that information for a pullback this week or a small, tiny little inching down. Now, again, it doesn't mean that we're going to pull back Monday. I want to make that clear. Just because we don't pull back Monday, or if we do go up a little Monday, remember, you still have resistance on the upside that most likely will get tagged. The 125 and a quarter-ish level is the level I'm looking for. So you really most likely see it play out like that, where you probably tag that resistance area first, and then you look for the pullback after. So, well, does it happen Monday? Does it happen Tuesday? Again, this is options X week, so we expect a little bit more volatility this week as the institutions push the little guy around in those options and try and take control and take all the money that they can. But that, again, is what we're looking at this point in time. All right. Now, let's go to the 60-minute chart. Here's your 60-minute chart. I want to zoom out a little bit to give you guys a better sense of where this market's come from. Remember back in early August, late July, when this market bottomed out at 104.5 or so on the SPY. We are now about 20 points higher than that at 124.50. Truly been an amazing run here. Markets are up basically 20%. Nasdaq's up a little bit more. S&P's up a little less. But it continues to look like the Federal Reserve is continuing to inflate asset prices. Remember, this is the game. If you don't understand the game, you're a piker and you shouldn't even be doing this, frankly. You have to understand what is going on in this realm. All right, you have the Federal Reserve pumping massive amounts of money into the system. They're creating and they're trying to create an asset bubble. That includes commodities. That includes stocks. Inflate stocks is really the key that they're trying to do. Well, really, they'd like to inflate houses, but housing is going to take a lot more pumping of money to inflate housing. But right now, they're satisfied with doing it with stocks, get stock prices up, and obviously we know Bernanke's thesis was make the average person in the economy believe there's no recovery, and that person will spend, thus creating a real recovery. Now, does that really work? No. I mean, that's what really got us into this mess in the beginning, is that you basically had people spending, running up debt, buying houses they couldn't afford, in other words, and then it all collapsed. That's what they're trying to do, though. Don't ask me why. I don't think in the long run. I think in the short run, yes. Is it working in the short run? Sure. So did the housing bubble work in the short run, and then everyone got caught with their pants down and took it a little roughly. You know what I'm saying? So understand that, folks. In the short run, yes. Will it work? Of course. You get that little high, like a drug addict injecting himself with some drugs. Yes, you get that high, but you need more and more drugs to sustain the same level of high. So understand these rules. Yes, we've had a great rally. Will it continue? Most likely. Most likely it will continue. Again, as I said, maybe a small pullback this coming week based on options X, based on a couple other things. And then do you expect the market to float higher as volume gets later into the holidays? Yes, you do. Could we go to 125 and change? Yes, I think we do. That is a little bit higher. If we get through 125, 126 area, then you're going to 131. Could we get there in the next month? It's possible early in the new year, as long as nothing happens out of Europe or Asia. And that's really what it comes down to, folks. Remember, the asset bubble is creating that the Federal Reserve is trying to create and has created, really, with the stock price. I mean, look at this move up. This is a massive move up. Okay, so Federal Reserve's doing what they've wanted to do. Is it getting people to spend? Yes, it is. Will it kind of entail a major recovery long term? No. Short term, yes, people will go out and spend. They see their 401ks up 20% in the last few months. Of course, you're into the holiday season. People are going to say, you know what? I can buy that for my child. I can buy that for my wife, my husband. I will go out and spend. In the short run, yes, that's good. But what happens in a year from now or in 6 months from now when that starts to dry up? What happens when they have to pay those bills? What happens when you have a hiccup in the market? Then people will pull back. Remember, people feel burned from the way the market's been. Really since 2000 when the tech bubble collapsed, people were getting a little bit, hurt there. Obviously very, very hurt in that situation. Then the latest one, 2008, 2009 pullback. People are cautious. As soon as things get rough, you will see people pull back that spending. So again, the key has to be look across the board. Keep your eyes on Europe. Keep your eyes on Asia. If Europe starts to have more defaults, if Portugal, Spain, Belgium, Italy, these countries start to need major bailouts, that will force the euro lower, and that'll push the dollar higher. That is a negative. That goes against the Federal Reserve's asset bubble. Remember, when the dollar increases, prices of commodities come down, prices of stocks thus come down as well, and that goes against. They want the weak dollar because it makes people think that they're richer, even though buying power isn't increasing, and then they'll go out and spend. It's a big rigged game, folks. I mean, if you don't know the game, as I said, you're a piker and you really should retire from any sort of trading and investing. You have to learn this stuff. In any case, it's your 60-minute chart right here, going back to the lows in early August, late July. Daily chart, very simply, you can see these lines. We've worked amazingly well, folks. This line, again, look at the pullback. We nailed this pullback. Again, the pivot dates have continued to work out. The cycle dates have continued to work out. And we teach you how this is done in the Research Center. We show you our keys in the chat room in the Research Center. If you're not in that, you're nothing. That's my personal opinion. You have to do this because otherwise you're just giving money away. And it's the most ridiculous thing in the world. And I've seen traders do it for years where they just don't want to learn. They want to take the easy route. They're just looking for the next tip. And, of course, they lose money. And I sit back and I say, too bad. That's just the way it is. You're not willing to look. You're not willing to learn. Education is number one, folks. There's a reason why if you go to college, you're spending, $80,000 these days in some cases to get a good education, and then ultimately you go get a better paying job. Same thing revolves in the market. You got to learn, and then you make more money. It's exactly the same. All right. In any case, that's what we're seeing. Next week, you will have some economic data, but really it's all eyes on the dollar at this point. Please be aware of that. All eyes on the dollar. We'll take a look at a couple of the charts here into the next week period. I want to bring up the dollar chart. The dollar again had a big move up off the double bottom. We nailed that double bottom bounce as well in the dollar. It went up right here to this resistance area, pulled back beautifully right to this pivot low, 20 moving average, dual levels there. Why? That's why you bounced. Now you floated up. Could be a little in spirit of bear flag, folks. If that does end up turning out to be a bear flag and the dollar falls into the end of the year, then as we've said, of course they'll prop this market up. Again, maybe a little weakness this week, but continue to look for an upside bias after that. You get any sort of 1 or 2 day pullback, go right back into a thought process of this market going higher. All right, that's the way it is, and the dollar's showing us that exactly. Yeah, maybe the dollar ticks up a little bit more, maybe not, but right here, again, if it goes up a little bit more, that shows us a little weakness, and then it starts to fall as the bear flag, and as it falls, obviously, you look for continued strength in the markets with an inverse relationship to the dollar. Gold continues to be a powerhouse. You're on support here. If you break that support, you have the 50 right below, and then this pivot trend line, and then ultimately any double top, triple top. This would be a triple if we went back there at 139 to 140. If you get there, most likely go to 140, which would be a new all-time high on the GLD, and we'll continue to watch that and see how it plays out. SLV, wild week last week. We nailed this top. I really drilled it into my members' heads how the SLV silver, there was just so much hype last week on gold and silver Monday and Tuesday. It was a no-brainer that it was going to top out on Tuesday. We talked about it. I missed my short on this by 5 cents. 5 cents. I had it at 30.05 on my short of the SLV, and it went to 30 bucks. Missed it by a hair. And look at the drop that happened after that. From here's your 30 level right up here all the way down. But it's just important to know this stuff. A lot of amateurs out there were buying up here. And I said it in that video that day. I said, you got to be an idiot to buy. I mean, look at the chart. I mean, you're really telling me do you go to the supermarket and see, oh, wow, look at that, milk's up 100% this week. I'm going to make sure to buy extra milk this week. No, you don't. That's ridiculous. You wait for it to be on sale. Same thing applies to stocks. And that's the one thing that's crazy is people start to get greedy and chase. Fear and greed rule the markets, they say. And people get, greedy and they see something up. Oh, it seems like it's going up and never going to stop. Are you ridiculous? Of course it's going to stop. It's going to come down. Don't be a fool. So when you see this, apply it to the methodology you use at the supermarket. It's the same thing. Wait for a pullback. Wait till it's on sale and then buy. All right? When you're buying up here, when the media is telling you, and that's a key, folks, as well. When the media is telling you to buy, run the other way. I mean, the media is never right. They're the biggest contrarian indicator out there. And I just remember Monday night seeing so much hype on it. And that was after we got this big move up right here. Just so much hype on gold and silver. And all it told me is short the next day, short the next day, short the next day. Be smart. Don't get caught with your pants down, as I said earlier in the video. All right, enough's enough here. We'll quickly go to oil's chart. You can see oil again. Here's your resistance up here, support and support. Right now, again, you probably have it's pulled back a little bit, so you'd probably be in a neutral position on the USO chart right now with your support and resistances. Again, if it gets through this upper level, it's probably going to go to about 39.50 to 40 on the USO. If it continues to pull back, tons of support right in here. Other than that, folks, I encourage you to join the Research Center. Get involved. Become a commander of your assets, of your trades, not a follower. Be the general, not the low-level kind of management. Okay? Be the top dog, the CEO of your future. Take care. We'll see you in the Research Center or in the intraday stock chat.